RWA with a laser focus on, well, the oldest safe haven asset there is, gold. And our sources paint a really interesting picture of the market right now. It's dissonant. On one hand, you have traditional assets, US stocks, US bonds, gold performing what the material calls too well.
Yeah, they're showing really strong momentum. But on the other hand, you have the crypto market,
which is described as being miserable, to put it lightly. And that contrast is really what's driving this whole conversation.
It absolutely is. I mean, for a crypto user who's feeling that pain, RWA tokenization is this immediate on-chain escape route. You can now get US stocks, bonds, and gold right there in your wallet.
So it's basically a hedge that's built right into the ecosystem you're already in. You don't have to off-ramp, deal with brokerage, any of that. The sources are calling it one-stop asset management.
And that phrase is perfect, because this isn't just a small trend. The movement is accelerating across a huge range of assets. We're seeing stocks, bonds, silver, and the sources even mention things like game assets.
It's a whole new world of digital ownership. But for today, let's stick with gold. The sources are highlighting two specific tokens here, PAXG and XAUT. These aren't just tickers, they represent actual physical gold.
Exactly, and that's the key point of trust, right? These RWA tokens only work if you believe the real-world asset is actually there.
Yeah.
PAFG and XAUT are designed to be backed one-to-one by physical gold, held in secure, audited vaults.
Audited being the key word there.
Right. We're talking about regular third-party audits that verify the gold reserves precisely match the tokens in circulation. It's about minimizing that counterparty risk that you'd worry about in traditional finance.
So you're getting the convenience of crypto, but with the institutional-grade trust of traditional finance.
Yeah, that's the idea. Now, tokenized gold isn't brand new. Exchanges like Gate and Kraken, they sort of paved the way.
But the real inflection point, and this is what the sources are flagging, is recent.
It's the mass market shift. The Binance app and its built-in Binance wallet have now launched trading for PAXG and XAUT.
And that's huge. It moves these assets from a niche DeFi product to something that's, available to hundreds of millions of people on an app they already use.
It completely normalizes it. Suddenly, the liquidity, the market depth, and just the sheer ease of access, it all skyrockets.
Okay, so let's shift to where this gets really compelling, and that's the money side of things. The financial incentives here are, frankly, the game changer.
This is where it gets disruptive. The source materials is very clear on this. Chain transactions for these assets have two massive advantages right now. First, they require no tax.
No tax, and second,
free trading fees.
So wait, no tax on the transaction and no trading fees from the platform. When you compare that to buying gold traditionally with sales tax, commissions, ETF fees, that's a staggering difference.
It creates a virtually frictionless environment. The sources state that the only cost for these transactions right now is the standard network GAS fee.
Just the GAS fee. That completely changes the economics, especially for smaller investors. But let's dig into that no tax point for a second. Is this a permanent feature or more of a regulatory gray area?
Well, it seems to be the current operating reality. The transaction is essentially a peer-to-peer transfer of a digital asset, which isn't the same as a taxable sale in most jurisdictions, at least not yet. The regulatory framework is still playing catch-up.
So it's a form of regulatory arbitrage that's creating this incredible benefit for the user.
For now, yes. And it's not just for gold. The sources also mention offers like a minimum 0% handling fee for on-chain stocks. It's a clear shot across the bow at legacy brokerage platforms.
So to synthesize this for you, the listener, moving your allocation between, say, a volatile crypto asset and a stable one like gold has been fundamentally altered. It's gone from this clunky, expensive process to something you can do in your app almost for free.
To sum it all up, the RWA trend, led by tokens like PAXG and XAUT, isn't just some tech experiment. It's a real financial disruption. It's driven by convenience, sure, but more importantly by a cost structure that is, for now, unbeatable. No tax, free fees, and just GAS.
All right, let's end with the big question this all leads to. Our sources make it clear that the major advantage right now is the absence of tax on these chain transactions. So what happens to the appeal of on-chain RWA when regulators inevitably close that tax loophole?
Does the convenience alone justify mass adoption? Or is this whole revolution built on a cost structure that's actually...
That's the multi-billion-dollar question. Thank you for joining us for the deep dive. Catch you next time.